Good morning, everybody. Welcome along to today's Compliance Corner webinar. My name is Sam Peacock from Compliance in a Box from Landmark. So here at Landmark, we're a big believer in helping agents to better understand their obligations when it comes to regulation. And we're going to be providing a monthly 10 to 15 minute update every first Tuesday of the month. We do also have a YouTube channel which is full of useful video resources for training on there as well as our previous webinars that we've done. And if you just keep a lookout for upcoming emails about our other webinars that we have, like you've done for today as well. So today we are going to look at what you need to be evidencing to HMRC to demonstrate that you have complied with the requirements to keep accurate records of your anti-money laundering activities. You may be aware that recently HMRC released an updated version to the 4th Money Laundering Directive, which I'm also going to touch upon throughout this presentation. So hopefully I will be able to give you a good steer on things, but if you do have any questions, my contact details will be on the final slide, and we shall also send out a recording of this to all those who registered afterwards. So don't worry about writing too much down, because we will send it out. Obviously feel free to make notes if you feel that will help. And with it being recorded, so if there is any of your colleagues that couldn't be on the call today, then by all means you can share it with those too. So yes, this will be sent out straight after today. So without further ado, let's get started. So we often start these webinars by revisiting the reasoning behind the compliance activity that agents undertake in relation to the money laundering regulations. Now, the intended aim of the regulations is to prevent the use of illegally obtained funds or terrorist financing from being legitimised through the sale and purchase of property. This is achieved through adopting measures within your business which assess the transactions you are involved in and identify whether in each case there is any risk posed by either the vendor or the purchaser or the circumstances around the transaction. These measures, also known as Know Your Customer, or KYC for short, inform the level of due diligence you complete to verify the legitimacy of the transaction. HMRC have ramped up their activity across all sectors to try and tackle the 100 billion it is estimated that is laundered through the UK every year. Property is a big part of the problem too. Property transactions present an opportunity to legitimise serious amounts of cash quickly. Regulated entities, including estate agents, are required to submit a suspicious activity report, or SARS as they're more commonly known, where there is any suspicion of money laundering. Property is under scrutiny because, against the context of around 1.2 million transactions, less than 1% of all reported SARS from April 2017 to March 2018 came from estate agents or solicitors. You might have seen the Channel 4 expose from Russia with Cash a couple of years ago, which highlighted this rising problem and apparent ease of purchasing property with illegal funds. The government have also launched an awareness campaign in 2019 called Flag It Up, which encourages the property sector to be more vigilant to money laundering risk. Excuse me. Although there is an acknowledgement from HMRC that estate agents do not handle any of the funds used to buy property, you are, in HMRC's words, a key facilitator in a property sale and come into contact with both parties to the transaction at an early stage, and so you are in an ideal position to identify suspicious activity. Helpfully, though, HMRC have released guidance, which came out last week, which outlines their expectations and provides some useful pointers for estate agents to stay the right side of the regulations. In its list of businesses for tax year 2018 to 2019 that have not complied with the 2017 money laundering regulations, HMRC identified regulated entities, including estate agents, who had not complied with the AML regulations. 535 penalties have been issued, totaling around £2.5 million. It is important for agents to understand that the fines are for procedural failures. No evidence of money laundering is required in order for you to be at risk of punishment. HMRC have outlined that the breaches are for failing to ensure policies, controls, and procedures at group level, failures in conducting due diligence, failures in the timing of verification and proper record keeping, and also failures in carrying out risk assessments. I provided a link here from the latest guidance that expands on the penalties and appeal processes from HMRC. It is important to ensure your record keeping is accurate and up to date. This includes maintaining records of your money laundering policy, procedures, and risk assessments, as well as retaining records of customer verification for 5 years from the end of the business relationship. If you have verified your customer via a third party, you will need to ensure that you have access to those records for the 5 years. HMRC are clear that they will expect to see your documentation when they do their inspection. Accurate record keeping also helps to demonstrate compliance with the timing of the verification. Vendors must be verified before the property is listed in order for you to properly complete customer due diligence. Purchasers must be verified around the time of the offer. Indeed, HMRC advise, in order to ensure customer due diligence is completed on time, you may consider that a helpful trigger point to begin the process of customer due diligence would be around the time when the terms are agreed, normally on the signing of a memorandum of sale in residential sales or heads of agreement in commercial sales. In practice, this means that customer due diligence should be carried out as early as possible on the other party. Selling agents should advise a serious prospect that customer due diligence will have to be carried out at the time of acceptance of the offer or before, so that they have evidence to hand to provide for identity. In the case of an auction, customer due diligence must be carried out before a binding contract is entered into. This may be achieved by either pre-registering bidders so that customer due diligence is carried out before the hammer falls, creating a condition precedent that customer due diligence is undertaken so that the contract is not binding until customer due diligence is completed. In the latest changes to the guidance, HMRC provide further clarification on how to deal with situations where you may not be aware of the client until further down the line, such as if a buyer makes an offer on your property through another agent in a joint agency agreement, or when you may not be aware of the sale, such as the seller finding the buyer themselves. Through these different situations, for the large part, HMRC do stress that you need to demonstrate reasonable steps have been taken to try to complete customer due diligence. So when HMRC ask, you need to be able to demonstrate the timing of your verification was completed in line with the regulations. Where manual verification is part of your process, you must ensure that any documentation collected as part of your client verification is verified for its legitimacy and it's in date, i.e. it's not expired. HMRC are clear in their guidance. If you verify the seller or buyer's identity by documents, you must see the originals and not accept photocopies. And records should be reviewed periodically to ensure, for example, that a fresh copy of expired documents is held. All records must be retained for the requisite 5 years and available on demand. If you are doing it manually, you need to think about how you will demonstrate you have checked for politically exposed persons and those on the financial sanctions list. The link for the current sanctions list is on this slide. On the current list, and this changes all the time, there are 165 pages of names, and you need to be confident each time you take on a client that they are not on that list. So, as I said earlier, you may have seen that HMRC recently released an updated version to the 4th Money Laundering Directive. And again, the link for this is on this slide. I stress that you take the time to read this guidance if you haven't done so already. The new version is to provide further clarification on the draft version that was released in June 2017. There is greater emphasis placed on demonstrating a risk-based approach and more information on how to do this. A risk-based approach is where you assess the risks that your business may be used for money laundering or terrorist financing and put in place appropriate measures to lessen those risks. A risk-based approach should balance the cost to your business and customers with a realistic assessment of risk that criminals may exploit your business for money laundering and terrorist financing. It allows you to focus your efforts on the most important areas and reduce unnecessary burdens. You must also now take note of information on risk and emerging trends from sources including the National Risk Assessment and HMRC's Risk Assessment, and amend your procedure as necessary. The link to the National Risk Assessment is here, and Chapter 8, albeit only a few pages long, focuses on estate agents in particular. So again, it's good practice just to familiarise yourself with this. Beneficial owners. So attention again is paid to identifying beneficial owners in the updated regulations, and it does offer further clarification on the different types of beneficial owners, such as when dealing with partnerships, joint interests, and corporate bodies, and so on. It says in the regulations that you must identify the existence of any beneficial owners. You must take reasonable measures to verify the beneficial owner's identity so that you are satisfied you know who the beneficial owner is. If it is a legal person, trust, company, foundation, or similar legal arrangement, you must take reasonable measures to identify and verify the ownership structure and look through the structures until you reach individuals who are ultimately the beneficial owners. And a way to check who the beneficial owners are is with the Land Registry title deed. Now, electronic checks provide a number of benefits over manual checks. In addition to doing away with the need to collect paper verification on most cases, reporting and auditing is one of the biggest benefits of using electronic checks. From a practical point of view, 5 years of client verification is likely to fill up a number of filing cabinets. Electronic verification is going to save you a lot of space in the office. Online storage also gives you access to a whole branch network's compliance activity from the comfort of your desk. I remember talking to the compliance officer of a large regional firm who was saving 5 days a month from traveling around the branch network by moving to an electronic solution, as he had the whole branch network's compliance at his fingertips. From the point at which you create a new case, you have documented an audible time and date stamped record of your compliance activity, so that when HMRC come knocking, you can open up an instruction and demonstrate when and how you've completed client verification. Consider your client experience. How many people's utility bills are now in online accounts with forgotten passwords? HMRC also don't allow for downloaded versions of utility bills when checking documents manually. They demand that you see originals, which can be time-consuming to chase and difficult to obtain. What if your client doesn't have photo ID? How might you deal with a client who is unable to come into the office? Instead of requesting to visually see original documentation for clients that you deem low risk, how much easier is it to simply complete an electronic check in under 60 seconds? Consider your own internal processes. Instead of continuously chasing people or going out to properties again and again to obtain documentation, what if that time could be redeployed and spent on revenue generating activities in the business? Electronic checks help to bring consistency to your estate agency. Landmark provide a range of electronic solutions to help agents deal with the implications of the money laundering regulations. From one account, you can evidence client verification, including politically exposed persons and sanctions checks, ownership and boundary confirmation, identify beneficial owners, as we have access to land registry titles on our system, as well as verify domestic and foreign documentation, all with a date and time stamped audit trail. When using electronic checks, the new guidance points out that you must use a package which addresses the risk detailed in your risk assessment and understand how it addresses those risks. Our checks give you the option to complete both normal and high risk checks, enabling you to further evidence this risk-based approach. Our system gives the option of completing both standard and enhanced due diligence in line with the requirements. Landmark also comply with the requirements from HMRC to safely and securely retain records for 5 years with open access to them at any point, as well as off-site storage backups. I also need to point out here that the updated version of the guidance points out that viewing a photo document over the internet or a selfie of a person holding identification documents or the use of Skype or similar is not an appropriate form of client due diligence, as you'll not be able to identify fakes or forgeries. The use of facial recognition software does not address this issue. However, with the landmark system, should you accept a selfie from a client, our system allows you the option to detect fakes or forgeries by giving you the option to enter a passport or driving license number for enhanced due diligence. Also, our system does not rely on or use facial recognition. The updated guidance also stresses the importance of staff training, and here on the slide it lists as a minimum what training must be covered. However, Landmark are here to help, and when you are a client of ours, you'll have access to an online training course, a wealth of resources and support material, dedicated account management, as well as being kept in the loop with the changes to the regulations. Further, we can also help you to create your risk assessment and provide templates on these. We go that extra mile by supporting our clients not only with the ability to carry out electronic checks, but to ease the burden with free training and ongoing support. Hopefully that's given you a good overview of the requirements around record keeping and auditing for AML compliance. If you do have any questions, please don't hesitate to contact me on the details on the slide here. Compliance in a Box will be delivering a monthly Compliance Corner webinar for estate agents to help you stay the right side of compliance. So keep an eye out for invites or visit our website to register for future events. If you would like to know more about Compliance in a Box, I would be more than happy to run through any questions and provide a demonstration of the system. Once again, thank you very much for your attention today.